Well, a big down day in a shortened trading session. I'll give you my stock market crash report. Plus, we're going to look at supply and demand in the stock market and how it pertains to how stocks move. I'll do my overall stock market analysis and we'll look at the day trade of the week on ATNF. All right, so before we analyze the overall market, let's talk a little bit about supply and demand in the stock market. Now, in theory, and this is what they teach you in business school, stock price is based upon the present value of future earnings expectations. That's very academic. It essentially means the price of a company's stock is based on its ability to make money in the future. And that is what the job of the stock market is, to figure out what that value is. In reality, however, we often see stocks priced the way commodities are priced, supply and demand. What is the price for a dozen eggs? Well, that's based on the demand for eggs and the supply of eggs. And in recent months, we've seen prices move up a lot because supply has been weakened by supply chain issues. And so you see, with the same demand, much higher prices for many common goods. Well, we also see supply and demand pricing in individual stocks. And it really comes when a stock has a very low number of shares outstanding. And so something that you can put in your toolbox as a trader is to determine what are the number of shares in the public float. If there's not many shares outstanding, then it's possible, if there's a large crowd demanding the stock, they can push the stock up to very irrational levels, things that do not make sense. But it happens because there's just not a lot of shares out there. So one of the hot stocks of the last week has been LGVN. Now, LGVN actually started 2 weeks ago, and it made a huge price move in percentage terms, absolutely massive. When you go and look at the number of shares outstanding of this stock, it's, I think, something like 2.1 million or 2.7 million. Very small number of shares in the public float. Well, then you've got hundreds of thousands of traders all trading a stock where there's almost no shares to buy. And the result is that you get these exorbitant moves driven by, some news that maybe sounds pretty good, but the company's in very early stages of a treatment for some sort of disease. I think child cancer or something like that. The point is that the stock moves like it does because it has a low float and it has a lot of people chasing after that crowd. All right, let's get into this week's market analysis, starting off with the US markets and talk a little bit about whether we are in the midst of a stock market crash. Now, Friday's trading session was shortened. We only had basically 3.5 hours of trading. And that was because of the holidays on the Thanksgiving US holiday. And in a shortened session, relatively light volume, we saw a huge downdraft as the market reacted to the potential of a new COVID variant that they found in South Africa. Now, we had this same sort of thing happen when the Delta variant was discovered, had some uncertainty in the market, and we had a small correction then as well. Is it going to lead to a major stock market crash, the sort that we saw, when COVID first hit in 2020, in March of 2020, February, March of 2020? Well, let's look at the charts because that's ultimately the best way to answer the question. So the first chart I have up on screen is the S&P 500, and this is a 30-day, 60-minute chart. So a very short-term chart, and you can see that upward trend line was broken earlier in the week. So there was your first signal that something was wrong. And then you had the follow through on Friday. Now remember, this is Wednesday because there was no trading on Thursday. So on the short-term chart, we've had a breakdown, that break of an upward trend line. But really, when we're talking about crashes, we need to think about what is the long-term view. And we're looking for whether the long-term upward trend is broken. So there's your long-term upward trend line on the weekly chart. And you can see that we haven't broken it. We certainly had a break in the long-term upward trend line on the weekly back in February of 2020. And then we had a little upward trend line break in September of 2021. This is really a market that is overbought, and we can say it's overbought because it's far above the upward trend line, and it's likely just to pull back to the upward trend line. Kind of like what we did here. We really set the upward trend line with that 4 or 5 week pullback that we had in September of 2021. And of course, this was September of 2020. So the pullback, I think we'll see more. We'll probably pull back to that trend line. That means more weakness ahead in the short term is quite likely. But until we break that upward trend line, and typically we break it from a falling top, perhaps on the daily chart, maybe not the weekly chart, but if we build a falling top on the daily chart of the S&P 500, and then we break this long-term upward trend line on the weekly chart, well, that's when you need to start to get concerned about a stock market crash. As it is right now, we're having a small little correction taking out the overbought nature of the market. Now let's take a look at the Nasdaq 100. We saw a little bit of weakness there as well. This is the daily chart of the Nasdaq, but you can see there's no falling top. And you can also see that we are still above that upward trend line on the daily chart. So we could fall quite a distance before we hit that upward trend line. And I think in the short term, we have to recognize that that's a real possibility. But for the long-term trend in stocks to reverse, there's still a lot of negative things that have to happen. On the IWM, we of course had that breakout a few weeks ago, early in the month of November. We've had quite a sell-off since that time. It was a good bullish signal for the IWM. We've gone a little bit parabolic to the downside. You can see the trend is going parabolic to the downside. And on Friday, we came off of the lows, which is a good sign. We closed off of the lows, but we still haven't broken this pullback. We still haven't built any rising bottom. So I think it's still appropriate to be cautious with small cap stocks. I do think that they are more likely to bounce back first because they started going down first. They've gone down the most, and they are getting a little oversold. So perhaps we'll see that as we go into November. All right, on the Canadian markets, you can see that we also had that weakness. And, you know, we had a big down day on Friday, but it didn't start Friday. The upward trend line was broken a number of days earlier. And that's the thing about the market, is it gives us clues earlier. And all you have to do is draw a straight line with a ruler on a chart, and you can see that when these lines get broken, it typically leads to more weakness. And we've had that as an example this week on the short-term chart of the TSX. But on the long-term chart of the TSX, we're still in that upward trend. We're probably going to pull back to the upward trend line and hopefully bounce off of it. And until we break it, I'm not going to get too concerned. On the TSX Venture, the microcap stocks in Canada, and you can see there also some pullback. But the good news is that we broke that downward trend line. We're at some short-term support. I think we may bounce. Do we make a falling top and then break down further? That's what we need to watch for. All right, on to the currency charts. Let's take a look at the US dollar, which broke out a number of weeks ago. We had the first breakout there, and then we had another one 3 weeks ago. We finished off of the highs for the week and really below the open for the week. And some people saying, oh, the US dollar is falling apart. In the big picture, it's really not that bad. A little bit of weakness wouldn't surprise me if we get a little more, but the chart for the US dollar is still relatively strong. On the Bitcoin chart, we rallied into that resistance. We've talked about that for a few weeks, and you can see that when markets rally into resistance, I say this over and over again, when markets rally into resistance, they usually get stuck at resistance, and that's exactly what happened. Does that mean Bitcoin is done because it's had a 20% correction in the last couple of weeks? No, the chart is still relatively healthy. The upward trend line is still in place, but I do think it's taking a breather, and it will probably take a little break for a while. And so to me, it's something to avoid in the short term, but still long term, the picture isn't bad. Ethereum has fared much better. You can see that, yeah, it had a little bit of a pullback the last couple of weeks, but its upward trend line is intact. It's coming just off of new highs. And so still relatively strong there, although also taking a bit of a breather. And then finally on the commodities area, you can see that gold trying to break that downward trend line. It broke it 2 weeks ago. It's retesting the lows. It's a chart that's trying to turn around. It just can't seem to gather buyer support. It gets a little bit of momentum and then it falls apart. And that's because it's fighting an uphill battle from the bearish market that gold has been in for about a year. On the oil chart, well, we had really strong selling in oil, but again, look at the upward trend line. It has not been broken. we ran away from it. When prices run away from the upward trend line, they usually come back to it. That's what's happened. It's now at the upward trend line. And so what should happen next week is oil should bounce. It may go through during the week and then come back to close above the upward trend line by the end of the week. We'll see if that does in fact happen. I would say it's got about a 70% chance of happening next week. And then finally, fear. You can see the big spike in fear, and this is a way to make money when the market is going down. Something like the VXX or other inverse ETFs. The VXX is a volatility ETF. Well, it goes up when the market gets more volatility, which tends to be moves to the downside. So you can make money from markets going down, and the VXX is one of the ways to do that. It was something that we were trading on Friday in Active Live as it was trading abnormally and breaking from some predictive patterns through the day. So my ratings then, US stocks and Canadian stocks, still bullish long-term, but neutral short-term as we are in the midst of a pullback. Haven't really broken down majorly yet, but it could culminate with more weakness. Gold neutral on both time frames, oil bullish long-term, and bearish short-term as it is working its way back to that long-term upward trend line. Stocks experienced strong selling pressure on COVID concerns this week, but the weakness has not broken those long-term upward trend lines. Oil did sell off sharply late in the week, but it's now at support and oversold, and so there's a good chance it will bounce back next week. Gold is struggling to find strong buyer support, and fear has made a bit of a jump, and trading fear through the VXX or UVXY is a way to take advantage of that weakness. All right, to end this week's video, I'm going to show you a day trade from Friday. Again, shortened trading session. But I want to demonstrate that even on a quiet, shortened trading session, sort of a holiday day, there are good opportunities. Now, we always look for action candles with my day trader strategy on Active Live. And ideally, what we want to see is a action candle breaking from a ascending triangle pattern. And we get a good example of that on this chart. If you ever wondered what an ascending triangle looks like, there it is, a beautiful example on Friday. You can see the spike of volume. You can see the price break on the 2-minute chart. And so your buy point right here, your stop loss point right there. For $100 of risk, we would buy 1,420 shares. That's a little over $7,000 in capital, which is $2,357 with margin. You can margin these 3 to 1. Now, not including the extended session, because of course the market actually closed at 1 o'clock on Friday. So if we just use the closing price, which at that point was a 5 times risk gain, a 5 RR, it was a $500 gain on $2,300 of capital, a 21.2% return on a one-day hold. Well, I'm not going to do a market scan this week because of the quiet, tumultuous markets at the end of this past week. So we'll leave it at that. Hope you've enjoyed this week's video. If so, click on the like button, subscribe to the channel, tell your friends, tell your enemies, and most importantly, trade well.